Hello guys, good afternoon. Welcome to Market Review. Today is September 17, a day before FOMC. So today's morning session was choppy. It was too much back and forth price action right here. It was going sell side, buy side, and during lunch hour, which had my interest initially, but I couldn't watch it. It took some sell side, relatively equal lows here from from overnight session, Asia, right here. So it dropped down there, and the rest of the session was choppy. Now let's take a look at the 1 minute ortho. So if you guys watched, or if you guys joined me on the live stream today, right before New York Open, I said something specific. I said I was bullish. I was looking for 19,926 rally to the upside, but I said one thing right at the New York Open. I said I do not like where the price is opening for New York session. The reason is it was already opening in premium at 9:30, and I had a bullish bias. So in those conditions I do not like to take trades. So what I had in mind was, so this is the previous day high is annotated here. 8:30 news rated the previous day high liquidity, and then it just kind of slowly grinded higher at 9:30. Immediately it ran up the 8:30 high here, and that rally I was looking for relatively equal lows because it was already in premium right here, relatively equal lows, and this SMT divergence is also sell side, relatively equal lows. It tagged both of those liquidity right before 10 o'clock. So this sell side drop was the macro hour, 9:50. It tagged the sell side, kind of chopped here. Zoom in a little bit, kind of chopped here. We also had, I forgot to mention that one, 9:32. This is the first fair value gap of this session. Let's annotate that. I'm going to keep that on the chart. First FVG of New York session, which was a civvy in this case. It caused market to rate sell side there right before during the opening range. So here we have NDOG, the pink shaded area as the NWOG. Market swept the sell side one more time and displaced higher. There is the lower time frame sub-second chart market structure shift here with the displacement right there, right here, and an inversion fair value gap which took the liquidity. It didn't retest an inversion fair value gap, but what it did was it formed an OB here. This is the order block, and it retested the OB, sent it to the highs. Buy side was taken, and it kind of started accumulating within the first fair value gap of the New York session. As you can see, it's going back and forth, and then dropped. Sell side was taken. That's the manipulation, because we need to be looking at the buy sides because the sell side damage was done. So it dropped down into the range EQ. Range EQ drop, sell side is taken. Tried to run highs, couldn't do it. Instead, it engineered liquidity, built liquidity up here, relatively equal lows, relatively equal highs. Dropped down into the discount fair value gap again. Choppy price action. It was really hard to trade, which is why I didn't engage with this price, because if you look at the price action here, it's actually violating all the PD areas. It's violating BISIs, it's violating SIBIs, it's violating order blocks, bullish order blocks, bearish order blocks, break blocks. So I was not interested. Plus, the opening range was rather small. So from 9:30 high down here, it's 100. Not bad. 100. 110 points, 110 handles. But again, that was the first concern that I had. The second concern I had was FOMC's tomorrow and rollover week. So it's the first day of officially trading the December contracts, which means that the liquidity and the volume is still relatively low, which is why you see a lot of gaps, like gap here, then let me see, gap there, here, a lot of gaps, and gap up, gap downs, and all that. So once I see the PD areas are not being respected on both sides, I decided to stay out of it. So here's the 9:30 high, the AM session high, which is prime buy side liquidity. So it dropped down here in the discount fair value gap, relatively equal highs, and we priced the market and tagged the buy side here. Once the buy side was taken out, we have a BISI here. So in that BISI, here. So in that BISI, what happened was the market formed a new order block before dropping below the CE of it. So this candle right here, 1048, the high of it was never violated, okay? And price displays below it, which means it formed an order block within a BISI right here. That's a bearish order block, and the CE of the fair value gap is violated, which means the price is weak or weaker than we want, because if it wants to go for 926, it is not gonna violate the CE, or it could violate it, but it's not going to form an order block. It's going to just slow grind down here and then rally immediately. Didn't do it, so it formed the OB, and that OB caused an inversion fair value gap. The inversion was retested there, sold off, sell side was tagged, and afterwards here, after sell side was taken out, sorry guys, so here's the sell side. Once that sell side was taken, now it formed a swing low, and we have a swing high, we have a dealing range. Market came all the way up to the premium portion of that dealing range, the premium fair value gap or inversion fair value gap, you can take that as well. This is the ugly part, like the price was not weak nor strong initially in the morning session, because the first fair value gap of the New York session was also violated. So if you end up trading this PA, make sure to not overtrade, guys, because it's gonna make you think that it's moving, whereas in reality it's actually violating every PD array. So premium fair value gap here, and this is also premium fair value gap. I'll annotate both of them. This right here, it's not a short that I would take with limit order. I would wait for a reaction or an order block or something like that. Once the order block is there, I can take that, or a displacement here, I can take that as well. So that would be right there, would be a high probability fair value gap trade down into these lows. The reason, I mean, I wasn't watching this at the time of this PA, but even if I was watching this live, I would not have taken this short here. Why? Because if you look at the sell sides here, we printed, or we did damage a lot on the sell side, like 1, 2, 3, 4 times already, right? So there's a jagged move here, but it's kind of lacking relatively equal lows on the opposite side. So the draw was not as clean as I would love to engage with. Okay, you can take it, but it's just my personal liking. Okay, it is still a valid fair value gap. I would not consider it though. I would not trade this at all. The reason is, again, the bias is not as clean. I could see this panning out both sides, honestly. So here formed the BISI, sold off, tagged the sell side here. Now we have a new dealing range with this formation of the swing low. Let's annotate that. It traded up to the range EQ, which is a premium fair value gap right here. Oops, didn't mean to do that. Where's the premium FVG? Came up, premium fair value gap, sold off, tagged this sell side, and afterwards it was just a breakdown, and it was going for, this is a market maker model, market maker sell model in itself though. From this high to this low is a market maker sell model. Why these highs and these lows? Because this is the morning session low. This is a prime sell side, right? And this is a jagged move. Now this buy side is also prime buy side. And if it goes bearish here, the real draw on liquidity, the highest probability draw on liquidity will be this low, because this low, you can think of it this way. Simply put, this low causes this high. You can simply put it this way. But for my liking, if I want to take a trade in this area or here, I want to see clear lows, okay? And in this case, we don't have it. We have a low that's clearer as a draw on liquidity right there, okay? I might have targeted that if today was not the first day of me trading the December contracts, plus tomorrow was not FOMC. Because of that, I did not have any interest in this chop. I didn't want to get chopped, basically, okay? So here's a premium fair value gap, drops down. This candle right here, 1205, is an order block. And that's the latest entry, in my opinion. You can get onto this sell side delivery. The order block was retested after price traded below it, this place below it. OB retest, sold off. There's a little fair value gap there. IFED sells off, and it tagged the sell side. Came down all the way into the end dog. Got a first reaction off of the end dog. Traded up into the SIBI. I'm not considering the first SIBI because it got inverted right away. And this high, or this candle, does not have a manipulation, so the likelihood of price going up above it and form a buy side wick is likely, which is what happened here. Price traded up the open price of 1222 candle, formed a manipulation, sold off, and completed the sell model on the bigger picture right here. At that point, I was thinking about maybe price would like to go for previous day's low. I was considering that at some point today, but here's what happened that I thought that I did that made me ditch the idea. So price came up to the buy side here, which builds buy side liquidity here, right? Engineering liquidity. Now it's relatively equal lows, equal highs rather. Then it dropped down, took the sell side, and immediately after it's a V shape. Once it did that V shape, I'm like, okay, this is either gonna chop or it'll clear the short-term buy side, which is about these highs, these two highs, and then it'll drop down. Didn't happen. It just chopped the whole session afterwards. So after this V shape, the New York session is over, okay? I don't have any interest. I also want to mention one more thing before this drop. This high being turtle soup, it's also an SMT divergence. I would like to mention that. I think it's either this one or that one. I'm going to check it out real quick. Yeah, this one right here. That's an SMT divergence, which means there's confluence in this area. The highest high, you can use this candle right here as your OB. Did not retest it after breaking down, but you can use this fair value gap as an entry, which is this candle's retest as an entry, or the CE if you have confluence. So something like this would have been a great short as well. You trust the SMT, you target the lows, or you take this, stop will be above the SMT, and you target this. Either or is fine. And afterwards, the rest of the session was just chop. Like here, nothing much happened. It's just range bound accumulation, and the market close afterwards. So going into tomorrow, I would like to mention a couple things before I wrap this up. I'm not going to be streaming the morning session for sure. I'm not going to be trading at all until FOMC. Even after FOMC, I don't know. Depends on the price action. I might consider taking something or not. I don't know that yet. Let me go up to the daily time frame though. I want to talk about a couple things on the daily. So on the daily, this is a December contracts, guys. What could happen, because we swept the highs, so here the buy side was swept right here, the BISI of the daily, and that's kind of a BPR, is being respected still. We're above the BISI. The CE was rejected today, but we also, so if FOMC wants to deliver sells or wants to do some damage to the sell side, we have this daily BISI. Okay, I keep this annotated, and then we have this gap right here, which might act as a PDR. ICT was talking about this on his 2024 mentorship. I call these things gaps, but I think ICT calls them something else. I don't know. He did not introduce it just yet, so I don't know how he sees this, but I see that as a gap because it's basically like close price, open price. There is a gap there, which is also NDOG. So if FOMC wants to do damage to the sell side, that will be the point of interest. But I would expect the daily, on the daily level, the bodies are respecting that level for a bullish move. If it's really bullish, if it's really want to go 926, I don't think anybody should close outside or below this level here. Okay, so keep that level annotated as well. This is the daily time frame, the daily gap. Okay, that might be a draw on liquidity. And this is the reason I'm saying this is because of the reaction from previous days highs today. So it just wicked, closed below. Although it's respecting the daily BISI, we could still see this. Okay, so I hope you guys find this insightful. Stay safe tomorrow. Definitely do not trade the AM session, please, guys. Do not trade it. You might think you see something. In reality, it's just going to be choppy, and the market will definitely be waiting for the FOMC. Instead, if you really want to trade something, consider taking the setups in the afternoon session after FOMC, after 2:30 p.m. or during the last hour. Okay, hope I make this clear. For me, this looks like kind of an accumulation here. I think the price is accumulating long positions. I still want to see 926 and higher afterwards. Depends on the reaction. So anyways, hope you guys find this insightful. Have a great rest of your day. I'll talk to you later. See you. Tomorrow's session is going to be afternoon session. I'll be live at 1:45 p.m. Just a reminder. Have a great day.